Hey legends, this is Adrian's Dunchik CMT Chart and Market Ignition. Welcome to today's Friday webinar. Please let me know if you can hear me, if you can see me. Okay, this is a new platform that we are using in stream through Restream, and I do really hope that that all the facility, all the microphone and all the setup just works fine. Please do let me know. And in the meantime, let's do try to catch up and find a way, to see what's happening in the market. There are a couple of very interesting narratives. Obviously, the word's gone crazy about the GME stock, right, and the roaring kitty basically being back in the market. GME, as I look at it, is at $30 right now, down 35%. Right, that's quite a heavy news right there. Well, without further ado, I do highly recommend so that we actually kick in right on. Mm, and we will start off by checking what's happening, like I said, in the traditional finance market, because ultimately what's happening in the crypto, we do really have to observe it through the lens of the other markets as well, right? Because it's all kind of like connected. It's all not living in its own isolation, in its own isolated, desolated mode. Arguably, it's actually all interconnected, and there is a way to track it by the means of the statistical function that is otherwise known as a correlation coefficient. So, Rafał, cześć, Rafał. Hi, Michael McGuire. Good to see you, my man. Good to see you. Let's do throw a couple of questions, see if you have them along the way. Like I said, please bear with me. We're using this new platform for streaming, so we're going to see how it goes. Although, I really hope that you guys have had a beautiful day so far, and this is just going to make it a little bit better, hopefully. So let's take a look, because ultimately, you're gonna go right there. All right. This is stockcharts.com. I'm not affiliated, however, I do appreciate being able to use this free setups, this free platform for basically for observing the chart. So here is just a little bit of a chart review. Hopefully, with that you can see. Mm, Dow Jones Industrials. Actually, fuck it. Let's try to have another setup. We're gonna make it a little bit better, and by making it a little bit better, hopefully we make this go ahead here. Right, this should be different. Should be better. So the Dow Jones Industrials, it's suffering a little bit when compared, for instance, to S&P 500. It's suffering. It's not necessarily in the best conditions at all lately, right? Even though we are kind of like moving at about 39,000 points right now for Dow Jones at 0.13% upward movement. Ultimately, we're talking about a much more of a sideways consolidation type of a pattern of a movement over anything that's happening on the S&P 500. Because when we do compare that to S&P 500, this is what it looks. S&P is far more better performing asset in this pair, right? So there is decent relative strength. How do I know that? First of all, well, all-time highs are just confirmed, right? The new all-time high of 53.66 or even higher, fatter. The high actually is not recorded yet because the day is not closed. However, like I said, we did go above, well, the previous record, closing all-time high with just 2 days ago on Wednesday. Right now, all that bullish crossover that happened here between the 20-day average and the 50-day average, well, it is continuing higher. It is moving in an ascending fashion, and this distance between those averages is improving, right? This tells me that the short-term trend continues to deviate positively against the medium-term trend, which is inclining anyway as well. And we all put it in the large context of a long-term inclining, very steadily inclining 200-day moving average, defining for us the predominant market tendency known as a bull market or a bear market. In this classical term, it is a cleanest example of a bull market possible, with 4,800 as a potential anchor. If things happen and rotate immediately out of nowhere and there's a black swan event, this is what I would search for, potential support. Otherwise, we magically lean on those magical now round numbers. There's some magical thinking behind those round numbers, and ultimately, now this is how our brains work, right? it's easier to remember 5200 rather than 52.17.37, for instance, right? Hence, we would naturally kind of like use those rules of this as a rule of thumb, as a heuristic, as a kind of like a mental shortcut to use the round numbers. So 5,300 for a 20-day support, 5,200 for the 50-day support, right? And quite a distance right there beneath for free fall space for 4,800. However, the strength is very apparent, is very evident. It's S&P is way stronger than the Dow Jones, which is not moving higher, which is not only moving higher and above 40,000 points as a new all-time high. We're actually somewhere in between the range defined by the April lows and the May highs as of lately. If we are to compare that with the XLE, right, which is a typical energy sector ETF that I like to observe basically as a good indication for what's happening in the energy market, mostly driven by the energy prices, by the oil, crude oil. And this seems to be declining. And if it is declining, that's a good thing, because ultimately this reflects the inflationary situation and from the macrofinance side. And the higher the energy market goes, the more inclination there is by the Fed or for the FOMC members committee to not only not drop the rate, not only drop the rate hikes idea anymore, to kind of like rather hold it, right? To hold the rates unchanged. Otherwise, the energy falling inclines and implies and encourages the Fed and FOMC to drop the rate cut bombs ultimately for the market, something that the market really likes and anticipates. And for many businesses, it can be a very strong inflection point when they start rotating towards the upward curving tendencies overall. So consumer discretionary flat at all. XLP quite nicely performing, quite a strong performance, way stronger than XLY versus at least this year, right? There's a decent outperformance of the XLY versus XLP ratio. The relative strength, risk on, risk off, is going to be more on the risk off side, with the energy prices still being elevated at 90 after reaching near the all-time highs and staying there a little bit. XLV, one of the ways also to observe it is if we let it play via the means of all the sector ETFs, basically, let's put it this way. Then ever since, it's going to be 110 days, I suppose, 108 days, if you will. The biggest performance comes at almost 18.4%. The communication services, while the biggest the underperformer is real estate, that is interest rate sensitive. Financials at 10.72% as the third in a row, and technology, XLK, is right behind, following the communication services. So this is what the market looks like right now. It's not necessarily the strongest, and when we put it against the S&P, then we can only see that there is communication services and technology only for the traditional markets just performing better than the S&P as a benchmark, right? Are those really good market conditions? I wouldn't say so. I wouldn't necessarily say so. Most of the ETFs, most of the stocks are actually underperforming, and they're underperforming quite significantly, 17% underperformance against benchmark of S&P 500 for the real estate. And right there is consumer discretionary at 11%. So the things that we want, right? Those are the things that we want over the things that we need, as in the food, health, hygiene, and so on. The things that we want are the consumer durables, like some, practical home devices, durable goods, cars, automotive, Teslas, and so on. So Tesla hasn't been performing particularly well overall over the course of the last 4, 5, 6 months. Ultimately, let's take a quick look at the chart for what's happening to Schubert. Please do let me know, guys, if everything works fine on your end, if I can proceed, and otherwise drop your questions so that I can actually cover them and bring them in with some good thought process. Let me get a sip of coffee right here. All the good memories, Michael, right? That we spent at the conferences. What a good lad you are. Good stuff. Okay, so try to continue to pursue and and go ahead. So here we are, right? Overall, the stock market isn't doing particularly well. The good thing is that the bond prices are kind of like just moving up, right? At 119 and 41, right there, breakout of the flattening 200-day moving average, which is something positive. There's a positive change. There is a 20-day against the 50-day crossover, which is also positive. The TNX is also up, which is interesting, and it's up much more than the 30-year bond prices. So 10-year note yields through 3.25% up to 44.20, right? So this is a little bit of a reflection that investors anticipate about 4.5% interest rate on the 10-year note yield right there. And if we continue to check on the CRB, as in the Community Research Bureau index for the commodities, well, the gold end of day contract at almost 2400, which is a decent point for consolidation. It's ranging, it's not really moving higher in this particular short-term, medium-term setup, however, or the short-term setup, if you will, right, which can be reflected by this 20-day moving average as the short-term curve. The 50-day trend is actually where the support has been provided so far at 2350 approximately. Like I said, those averages often work as the benchmarks, as the anchors for us. Now, same as 2100 as a long-term support, and this support continues to incline as that trend line, 200-day trend line indicates. Gold is in a bull market, and so is silver, although silver is performing a little bit worse and slower. All right, so even though silver is a little bit more aggressive on the growth side, even since from March all the way from 22 points, from $22 per ounce all the way to almost $33 per ounce. That's a 50% growth over the course of the 4 months. That's quite aggressive, if you ask me. All right, so silver is a little bit more spoiled, aggressive version of gold because there's less of it. It's much more sensitive. When it pumps more strongly because there is less of a supply available in the market for trading. Otherwise, cryptos, let's take a general view, only the general view right now. It's a little bit mixed, although there is dominant tendency of seeing green, right? I'm looking at the performance gains today. Bitcoin 0.20% negative, 1.02% negative Ethereum, 0.52% negative XRP. And the biggest winner lately was the BNB, which is not arguably, it actually is quite a strong performer. Very strong tendency of inclination of rise on the 200-day moving average at 450 approximately. Again, round numbers support. This is what I would argue, that if things go really south, 450 maybe the support. Although a beautiful base, beautiful sideways pattern right there developed. Now, I would even argue, to say that it's a beautiful ascending triangle type of a consolidation, and compare that with Bitcoin, right? Bitcoin has been not only not climbing higher, right, which shows relative weakness against the BNB. It's actually right now near the resistance area, and the trends are much more flat oriented. Here for the BNB, there's an actual, there's been less flatness, if you will. There's been less flat types of the movements, while actually, again, the lows were being cut short right there, right? There was a series of inclining higher highs and equal highs and higher lows, typical ascending triangle type of a consolidation. And this consolidation was interrupted by this positive bullish breakout all the way to the new all-time highs, because ultimately, if a coin shows you an all-time high, how often does it happen? Does it happen by accident? Can a coin with big market capitalization basically go and then pump, to all-time highs by accident? I wouldn't say so. So there is an overall good case study for traders. BNB rocks. And what does Bitcoin say? What does Bitcoin say? What does Bitcoin say? Well, the Bitcoin says that the 55,280 is the support defined by the dominant 200-day moving average trend that represents the bull market, right? And interestingly enough, I didn't notice that until now. we actually breached the highs of the, let me compare that. Let me just make sure that we seem to actually have gotten bigger uh, growth on the 200-day basis than Bitcoin ever was before. The previous record was about $50,000, right? And it was in 2021 on average, right? And here we are at 55, outperforming by 10% so far, with the all-time highs at almost 74,000. And well, interestingly enough, the market seems to want more of it, right? How do I know that? Well, let's go to X real quick. One of the posts I did earlier today was actually this one, right? ETF net flow surge while Bitcoin nears technical support cluster, a supply cluster, my bad, sorry. So key support defined by the 200-day B-Pro average, the short-term, nearer-term moving average, giving you a little bit more recent data, is at key support of 63,600, while the triangle locally has been broken out to the upside. The inverse head and shoulders is broken to the upside in a positive, constructive fashion. So the patterns seem to be indicating the upward types of a movement. However, like I said, we're not moving in a bull. We're not moving in a price action based higher highs and higher low sequence. So I would take it with a grain of salt, because Bitcoin has been moving between 56,000 and 74,000, actually in between, some sort of like a chop, bouncing from one boundary to another. So even though there's been a decent inverse head and shoulders breakout right here, even though there's been this decent triangle breakout right here, I would be cautious, right? I would be cautious because there's no new all-time high. There's a supply cluster that can be expected because of order clustering, because we see that the previous resistance was 74,000. The current regions of the trend line are about 72,000 and so on. So the 72, anywhere between 72 and 74,000 may be considered a little bit skeptical and filled with skepticism, as in taking profits, as in the initial opposing force to the bulls, as in and supply cluster to fight. So once we get and rip through it and close the day off to new all-time highs, this not only annihilates and neutralizes the entire supply cluster, it also actually probably considers some decent short squeeze. And this all happens with a positive spike on the Bitcoin ETF flows, as marked in red over here, right? So massive spike, which is 10 times up, approximately 10 times bigger than the couple of days before. So all in all, it seems that the institutions are set in a bullish manner. So I love using the blog data. I'm not affiliated with them. However, I do appreciate their insights right there. With the total cumulative Bitcoin spot ETF volumes basically having granted us so far with almost 290 billion as of the 6th of July, as of yesterday, with the net flows being slightly dipping yesterday versus the last 2 or 3 days at almost 1 billion, at 886 million, 87 million approximately. I beat the BlackRock Bitcoin ETF spot at 20 billion under management, 20 billion, a little bit less, 2084 versus 2023. Seen for the GBTC, for the Grayscale BTC ETF. All in all, like I said, there seems to be decent engagement, and the institutions seem to be basically positioning to the upside, right? They seem to be anticipating the actual all-time high breakout. Whether or not that happens, I have no idea. However, the anticipation driven by investors on the institutional basis who deal with a lot of money, betting on the upside where Bitcoin is in a support cluster, while all the upward trends are actually indicating the predominant market tendency to go up, I would say that this gives a little bit of convenient confidence when thinking about the potential upward breakouts, right? So it may happen that Bitcoin is actually going to follow this decent push by the BNB, and if that happens, well, if we do break 74,000, I would arguably see a next magical pit stop at $80,000 because, well, of the round number magic, right? So $80,000 may become the next cluster. Now, and that besides, we would actually see, let's take a look. We were looking at the base Now, with a classical charting, we would be looking at the base basically between right there. Here we are, 56 and 74, which is going to be $18,000, and $18,000 added on top on 74 arguably takes us to 86, right, or actually more, right? 74 plus 8. This is going to be 82, 92,000. So anywhere between 80 and 90,000 arguably might be the actual technical breakout target, right? I have no idea where it goes. However, all I know is that we can anticipate that 80,000, anywhere between 80 and 90,000, there might be some actual consideration for the targets, right? Again, the simple base measuring type of a movement, 56,000. Let's put it in here, right? This is a 56K. This is a 74K right there. Well, arguably, like I said, we just take a distance between the high and the low, being it base size, basically, right? The size of the entire base, size of the pattern, basically translating to $18,000. It's quite a widespread pattern right there. And if we add 18 on top of 74, this takes us literally to $92,000. So 92 is a little bit more aggressive. I would say anywhere between 80 and 90 can become an expected, anticipated target and region if we do manage a breakout to the upside, right? So the odds are fairly interesting. Whether or not the volume decline is of concern, that's another story. I wouldn't necessarily kind of like just be extremely pessimistic about it. This is what typically happens, because ultimately when the pattern develops, the more it develops, the more uncertainty traders would have. This translates to them being more capital conservative, less risk seeking, and just letting the market play out and see and pick the sides and pick the odds. Because of that, there's fewer traders trading that actively, hence the volume's dropping. Right, that's the chart that you guys have seen. And real quick update on my end for the trade side, right? My trades are still rolling from this bull signal, which triggered with a breakout at, it was on May 15th. So it will soon have been, in a week, it will have been an entire month in a position. Although I had already got chopped, quite significantly in this period, right? That the sideways period for trend followers is not necessarily the most favorable one. This is where I get chopped a lot. Bear signal kicks in. This is where it knocks me out. Bull signal kicks in. This is where it holds, but there's a local tiny little bit of a breakout, right? So the sideways patterns kind of like tend to develop with an overthrow just a little bit on top. There's liquidity grabbed in a little bit at the bottom, right? Then a little bit again on the top, just a little bit higher than the pre-4, then just a little bit lower than before. This is what typically happens, right? And ultimately what it means is that every single breakout, false breakout to the upside or to the downside, is basically knocking in and out of trades. And so that lately, from the entry at about, what was it? $66,000, I assume, 66,300 or so. The position has been running until, with the current stop loss level at 68,743, assuming this is where we close the day. And one thing to consider, this is a little bit of a caution, actually two things to consider. Cautions. Momentum is flat. This is RSI against the 50-day momentum trend, 50-day RSI against the simple RSI overlay. So what it tells you is that typically the trend is not bullish until or unless it is spending most of the time in the upper region of the RSI, above 50 or above 60 or above 70, even more so. The more time it spends in the overextension in the potentially overbought area above 80, the more strength there is in a trend, right? So at the same time, the ATR, which is the average range, which is the measure of technical volatility, the spread and the width between the prices, the highs and the lows, the ultimate highs and the lows between the prices over a period of time, it continues to diminish. It continues to decrease, right? On the 50-day momentum, on the 50-day volatility trend, right? Taking us anywhere between from 3,500 all the way down to 2,800 approximately, with the daily volatility at 2160, 2180. So the volatility is far below the average, 28 versus 21 or versus 28. Quite a strong 25% drop, if you ask me. So quite a significant underperformance right there on the shorter term basis. However, what it tells me is that this is exactly what's typical about the sideways types of the movements, right? So the longer the sideways period takes, the less volatility there is. However, ultimately, the volatility needs to kick in order to confirm a breakout, because if the breakout occurs in low volatility, right, and Bitcoin, imagine it's right now again consolidating here between 56 and 74. If it does break out higher and the volatility is very low, this paves us a very good candidate for another false breakout and another kind of like just trap with another liquidity hunt, if you will, taking the opposing side of the stance on the market. All right, so the breakouts on the low volatility are not really credible. I would be very, very cautious with them. And another caution comes from the short-term recognition of the momentum bands by the Burbigator Pro. Those are the custom momentum bands that we have and that we use. And what clearly can be seen is that the only trend breakouts that they come and they do appear when there is a strong breakout to the upside. Let me give you an example. And this breakout continues to perform in the same direction. This is a strong breakout example, anywhere between 52, 53, and 55, taking us by 5% approximately, right? Higher on a breakout day. Well, we don't see that here, mainly because Bitcoin is moving inside of those momentum bands. And if that is happening, then it means we're moving inside the regular volatility frames, inside the regular volatility zone, right? With the main core of the business basically being focused anywhere between basically, which is 72,500 and 69,000. 72,500 and 69,000, right? This is the main kind of like zone to expect for Bitcoin, 69,000 and 72,500, right? And as long as we continue to move within those bands, there's no confirmed breakout. And any breakout that happens, just like this one, just like this one, that it doesn't hold, but it hides back inside, right? If there's a breakout, but it hides back inside those bands, this is a false breakout, and the market promotes the sideways environment. So let's do pause here for a moment, and please do let me know. Quick question: crypto soon, the Bitcoin will dry up. There are a few ways to acquire by the exchange company. By the exchange company country holding, hack it out of whomever, find another way to. What? Soon, hold on, let me check real quick. Quick question: crypto soon, the BTC will dry up. Few ways to acquire. It's an interesting question. Hold on. By the exchange company country holding, hack it out of whomever, find another way to take it from you. So what's the, I'm trying to see the question, having a hard time seeing the question. So if Bitcoin runs up, right, as in the situation where the ETFs consume far more supply than there is produced on a daily basis, then natural reaction is that the available supply shrinks because the demand rises, and because of such the price increases, right? So the prices incline, and if that is the case, you have to beat it with the market, right? You have to rip it off of someone. So I'm not really sure you can rip it off the institutions unless they sell, right? Otherwise, you may try your luck and basically go go make deals with the miners. Interesting question. Okay, then. So let's try to take a couple of final looks at the gold, silver, and a couple of other charts that I've got in stock for you. Let's do take a quick moment right there. Here we are. So gold and silver. This is a comparison of gold and silver. And well, gold has been outperforming silver by quite a lot, right? Silver only recently broke out to the upside, which is a good thing because it also built a long base throughout 3 years, right? Or even more. Mid 2020 through mid 2024, that's a 4 year base. And this base is actually anywhere between, for silver, it's $20 and $30. So a technical base size is basically $10 per ounce, potentially taking us to 40. And if this takes us to 40, it literally may take us also higher because the all-time high was about 48, right? So if it happens that we actually go ahead and tackle, the 2010 to 12, 2013 highs and it takes us basically down to 2011 and 2012 highs and peaks at around 45, $48 per ounce spot. Arguably, this may even take us even further because the metals, the precious metals, the gold, like I said, it's in a bull market that the trends are equalizing. Those are not my opinions, by the way. I'm not giving you my opinions. I'm giving you facts, right? So those 200-day trends can show you the dominant trends, show you the dominant bull market or the bear market. If it inclines and it does incline, and because of what I showed earlier, this continues to be positive for gold and silver. However, gold is far stronger than silver, right? So the outperformance is on the gold side relative to silver, not only because gold broke out higher, right? Anywhere between 2022 for 24, basically taking us by 20% breakout. For silver, it was anywhere between 30 and 33, so 10%. So 10 percentage points difference of outperformance for in gold's favor. And let's take a quick look. And this is a shout out again. Please do mind that Aleph0, A0, one of the excellent projects. They're actually our partners, right? So please take and accept this disclaimer. So anything that I say might be a little bit prejudiced. Although, uh, if I were to comment on the technicals, ultimately, we would be looking at a large sideways pattern, right? That hasn't changed much since this last time we spoke about it, but this last sideways pattern seems to be like a long-term, sort of like a type of an accumulation. I remember in 2017 being well invested for a moment in TRX, right? I don't even remember what this coin was anymore. But TRX against USDT, I think it was moving in a very kind of like a choppy oscillation manner, very similar to this one, right? And what it did, after it kind of like knocked me out of the stop losses, it actually ripped 20x from there, making this gigantic big space of sideways movements and choppy oscillations basically look tiny when compared to this massive pump that arrived later, right? So it's easy to get lost in this local context. However, ultimately, like I said, it's of crucial importance to pay attention that this local context of A0 oscillating between now 0.78 approximately in $2, it may turn out to be just a tiny little bit of a consolidation accumulation of a longer term breakout, because the intrinsic value of the fundamentals of ALEF are very much there. Um, you know, they are very solid crew. They have a lot of great projects under their hood, under their umbrella. Um, However, the technicals don't look good, right? The technicals are there. The bearish stance on the B Pro on the daily. We price action wise, we continue to crawl at the depths of the lows, basically at about 0.7, 70 cents, $0.7. The 200-day B Pro trend continues to tell you that it's not a bull market either, because it continues to decline. Now, the 200-day trend, which is barely visible over here, this light gray curve seems to be curving down as well. So unlike gold and silver, unlike, for instance, Bitcoin, where there's a clean difference, right? This is the same trend 200-day trend that is moving up and higher and higher and higher. In the same period, basically A0 is moving flat or the sine curve or declining right now over the course of the last couple of months. So, be mindful of that, because technicals, the fundamentals are very strong. The technicals are not really very strong. They are quite weak, arguably, right? And this technical weakness may translate into further declines if we do sweep the lows, right? Sweeping the lows is not really bullish. I would say, if I were to guess if it's more bullish or bearish, I would say it's more bearish, unlike or unless we continue to climb above $2, which would be a bullish breakout, right? So even though they're excellent intrinsic value of the project, they're very nicely organized and well managed by their team. I know them in person, great people. The technicals do not reflect the actual value, which happens most of the time. However, there seems to be a strong kind of like a buy the dip opportunity, as long as we continue to move inside of the similar region of $0.7 right there. And sideways patterns have that in common, that they do oscillate between the highs and lows like a ping pong, right? Like a ball basically coming in and out and in and out, up and down and up and down. So there's not much constructive price action. Something to consider. And there's a very strong performance from another partners of ours, Flocky, right? Flocky is such an amazing community, very good people, and great team as well, right? Initially a meme coin OG, right? That was given a lot of utility of attracting a lot of mainstream attention from the media in favor of crypto. So 200-day trend continues to incline, and because it's actually the biggest meme coin on the BNB chain, which actually broke later, this affected positively overall the performance of the coin itself as well. There's a decent alignment between Flocky and BNB basically lately, and it's quite apparent, even though the breakout was weaker and there's kind of like just not much power on the resistance right there for Flocky on the relative basis. BNB right there seems to be dragging Flocky out of its consolidation, or at least giving it a full attempt. And another shout out to our partners as well at Credify, and I'll take one or two maybe chart requests if we do manage to have enough time. So drop your tickers, drop your questions. I'll try to answer them real quick before we wrap the stream. However, this shout out goes to Credify, who are also our partners. And high time frame trailer stop on the technical side is at a resistance of 3.2 cents at 0.32. It is not broken yet. It hasn't been broken yet, right? And the 200-day trend is moving up. The 200-day simple moving average is moving up. So there's a clear instance of a bull market, right? Massive bull market breakout as well, right there out of this long-term base consolidation that was right there. A massive breakout with some sort of like a cap and handle created of another cap and handle, so some sort of like a fractal nature of those patterns. However, like I said, the momentum is not really strong because it's somewhere in the neutral and the no man's land. It's not really good, or it's not really constructive. It is what it is. How it's not really constructive for the price action development. However, the sequence of higher lows and somewhat flat highs tell me it doesn't necessarily it doesn't have to be this way, but it may be some sort of a consolidation, reminding me of an ascending pattern, of an ascending triangle, right? So a series of higher lows and equal highs. This is what would kind of like qualify this in an ascending triangle pattern, which may be a potential bullish reversal pattern. So if that happens, first we need to see this breakout over the threshold of 0.032, and if that happens, things turn bullish for Credify again. Quick check. Some time ago, I did post, a message that even though we don't know the future, per the current valuation of the market at 2.42 for the Z-score, for the Bitcoin market value, realized value, showing you basically how much market capitalization there is over the actual capitalization coming and stemming from the summary of all the transactions happening. It shows you how much bloat there is in the profit on the market, how much margin, how much profit there is, how much leverage, if you will. And historically, anywhere above 5 or anywhere above 0.75, 7.5 or 7 was basically marking the actual top and peak, right? So this red area seems to be a typical contrarian area. So whenever we go back above 7, and the z-score, which measures the number of standard deviations. This is where I would go to anticipate. So per the current rates, Bitcoin is at 2.42, right? 7 is where it starts, right? So quick maths, tells you that we have about 3x of a type of a movement to the upside, basically, from the current prices. If we are to pump, like I said, from this price today, 3x, this could mark a potential top today, right? This would be the price target for the top of the bull market if we were to top today. However, we are far from there, right? So take it with a grain of salt, like I said, but the simple evaluation, simple maths would indicate that 225,000 approximately could be the peak if we are to remain, and then rally from the current prices. However, that doesn't necessarily have to happen. Otherwise, the average mining costs right there at 74K, the previous 78K, the market is unprofitable with the current rates at $70,000, unprofitable by about 5%. So it's not necessarily the most bullish thing for the miners, as they may need to sell Bitcoins that they mine as the rewards for profit to keep their businesses going. Although there's an inclining tendency overall, right? That's since 2024 started, there's a decent tendency on the profitability of the miners. So let's do keep that in mind. And that being said, let's take a final check at the seasonality study, basically taking us as early as 2010 all the way until, the 31st of May. Let's do check in that. Yeah, only the May is available until 29th. So let's do check 29th. And what is it today? It's 7th of June, right? So if you find 7th of June and run it all the way until the end of June, which is the 30th of June, the what it should produce ultimately is the pattern right there, right? So 7th June through 30th June tells us that the annualized return is minus 6.94%. The average return is minus 0.45%. So it's not necessarily the bullish case. And it's 38% winning trades only, right? So only 38% of the time, this particular region in the Bitcoin history over the last 14 years actually went up, closed higher, that it was positive, right? So I would take it with a big caution. It doesn't necessarily guarantee the prices are going to drop. However, you have fairly lower chances right now for the next 3 weeks, 4 weeks ultimately, to anticipate the bullishness in the market. Average return is minus 4.45%. Winning trades, only 4 out of 10 trades approximately are closing higher and positive. 6 out of 10, 62%, 61% are closing lower than they opened, right? For this particular period over the years, mainly drifted by a strong loss in 2022. Obviously, that came in with the Terra Luna. So if it hadn't been for the massive loss, right? If it hadn't been for the massive loss, perhaps the results would have been so much less negative. However, this massive drop of 36% of the last Terra Luna crash last year, 2022, no, last year. This is what kind of like lowers the expected return overall at all. However, without that, let's take a look until 2020 first, right? If that happens until 2021, then the average percent return is 2.18. So there's a massive diminishing, lowered expectations because of the Terra Luna crash in 2022. So that takes me basically to thank you, Amy. Thanks for kind words. And well, this is also to kind of like congratulate you guys, because there's almost 2,000 people watching this live. That's pretty cool. So shout out to everybody who's watching that on YouTube or on Twitter, on Twitter at crypto_BIRB or at the Burb Nest. This is a shout out to you, ladies and gentlemen, because if you're watching that, that means you are in the potential winning group of people, right? Because you are in the early stage. There's still a lot of earliness, right? Is there even such a word? We are still early, right? The valuation models, the fundamental valuation model, MVRV, the market value realized value, shows you that 2.42 against 7, which typically showcases the Bitcoin peaks, gives you a rally, gives you a 3x rally from here potential. Whether that happens or not, I have no idea, no clue. All right. However, we seem to be fairly early. We don't seem to have a lot of enthusiasm just yet in the market, and it seems actually there's much more pessimism, right? And this pessimism is something that holds many traders back, because typically they might have lost money. They're scared. They're fearful. I don't blame them, right? Because back in the days, I lost a lot of money as well when I had no risk management, no risk control, and I definitely paid my lesson. I made a lot of mistakes. However, ultimately, our job is to make sure that our wins over the long run basically outperform the losses. This is what defines the market profitability. This is what defines the trader's profitability. This is what defines our success. It's not only to win one battle. It's to win the entire war out of other parallel, if you will. Right? Correct, Michael, my man. We're at the sapling stage, and this is my pleasure to be able to serving you this content. And Ricky Garcia, good to have you here. Um, I think this is the right time to put a full stop over here. I do want to appreciate your tuning in, you finding the time and interest to scale and tune into those shows. If you appreciate it, if you enjoyed, just make sure to drop a comment, hit the likes, hit the subscribe button wherever you are. That's gonna help us just basically move the algorithms higher, better, serve you more and better of the content. And this is me coming out as uh, with the last piece of news, basically, because we are closing our applications for the new job hires. So this news comes out as the last piece of the day's webinar. We are closed for the new job applications. We are in the process of hiring new people and expanding our team to give you more and better. And that's been me, Adrian Zdunchik, CMT Charter Marketing Edition, CryptoBirb, talking to you, and have a rest of the day. Beautiful on your